Welcome back to the channel. 1. You want to hire family members. See, the cool thing is that hiring a family member is one of the best ways a small business can reduce its taxes. There is a constellation of options that the IRS allows for this. As a matter of fact, you can even hire your children to shelter your income from taxes. Income paid to your children has a lower marginal rate. Sometimes the tax is eliminated altogether. And what we love here is that if your business is under sole proprietorship, in other words, you're a sole proprietorship or you're a single member LLC or a single member S corporation, your child's wages are exempt from Social Security and Medicare taxes. Just make sure, this is quite essential here, make sure that the earnings are justifiable for business purposes. In other words, the IRS is not looking at the monetary transactions and start thinking you are making gifts to your child. No, it must be an actual salary for services performed. Okay. Meanwhile, hiring a spouse would also reduce taxes since the earnings will not be subject to the Federal Unemployment Tax Act, FUTA. 2. You want to look for ways to reduce your AGI. See, the whole thing here is that if you're a sole proprietorship, again, you're a single member LLC or a single member S corporation or just a sole proprietorship, your AGI will have an important impact on your business income and vice versa. In other words, you are going to report your business income on Schedule C, and from Schedule C, you are going to actually reflect that income or loss in your taxable income overall. So this is really important, and there are a lot of ways you can reduce your adjustable gross income, right? One way of doing this is through the use of itemized deductions. I'm thinking about mortgage deduction, property taxes, and charitable donations, or individual contributions to retirement accounts such as 401k and IRAs, and even contributions to a health savings account. So those are really important. So 1, you want to hire a family member. 2, you want to look for ways to reduce your AGI, especially if you are a high income business owner. This is important. Let's say you are in a niche industry, you're a lawyer or you're a CPA or you're a creative, you're an architect and whatnot. So it's important to really find ways to reduce your AGI so you can actually benefit from more tax credits or avoid additional taxes like the Medicare surtax. 3, you want to account for business losses. Keeping track of business losses is a fantastic way to reduce the amount of taxes you owe each year. Business losses can be deducted from income, in many cases lowering your business overall taxable income by thousands of dollars. This can save you as a business owner far more money than just making deductions for items that may be considered personal, such as mortgage interest or charitable donations. And the cool thing is that if you want to account for business losses properly, please keep track of them. We tell our clients all the time to actually have an Excel spreadsheet where you basically are tracking business expenses from one year to another, because in case the IRS does not allow you to deduct the full amount, you can carry forward. You can carry the extra loss forward to future years. So this is really important. 4, you want to track your travel expenses. You can deduct more than airline tickets and mileage for your travel expenses. Many entrepreneurs are ramping up traveling again to re-energize their businesses and expand their knowledge within their industry. Luckily, you can write off most of your travel costs as long as the primary purpose of your trip is business related. This is pivotal. The IRS pays attention a lot to that aspect of things to make sure that the primary purpose of your trip is business related. It has to be essentially business related. In other words, it can't be like 50%, 50-50. No, it has to be at least 70 or 75. Along with airline tickets, rides to and from the airport, and travel by car, rail, bus, and ferry are also deductible. Accommodations and meals are deductible as long as they are for business. Lodgings are 100% deductible, okay? And for this year, business meals are 100% deductible for the cost of meals provided by restaurants, okay? However, nothing is deductible if the trip is a vacation in disguise. So be sure to keep detailed records of your travels and all expenses incurred so that you can back up your claims if the IRS decides to challenge them, and they do challenge them. Now, if you want to maximize your auto tax deduction, please make sure that you are able to you can have an app. You can actually find a way to use the right vehicle. There are a lot of strategies we actually covered this on another show. So if you're interested, please let us know. We'll just send you a link because I don't want to waste too much time in this show about that. But there are ways to maximize your automobile tax deductions. Really, really easy. Five, you want to consider all expenses such as rent and utilities. By the way, I just want to quickly remind you of today's topic. We're having a conversation about 20 tax saving strategies for small businesses. We're trying to save you money as much as possible. Okay, so you want to consider expenses. So expenses reduce your overall tax burden. So never forget to include all business related expenses when filing. And these expenses can include things like the rent you pay for your business space, which can add up to a lot each year. And even if you actually work from home, you can actually deduct the portion of the portion of your house that you allocate to your business. So again, we covered this on another show, along with how to maximize your automobile tax deductions. We also covered how to maximize your rent tax deductions. And you can also have utilities like high-speed internet, so long as they are directly related to running your business. Properly account for those expenses because they can reduce your taxable income when filing. 6, you want to hire a reputable expert. So when we talk about reputable expert, we're speaking about a CPA, a certified public accountant, a tax planner, an enrolled agent, an EA, or a tax attorney. Okay, and there are many laws and subtleties that are associated with business taxes, and you don't want to risk overlooking something important when it comes to your taxable account. You may be able to tap into health savings or write off a qualifying child care expense. A professional such as a CPA, an EA, a tax attorney will have actually a built-in strategy to get your taxes done right regardless of your financial situation. In addition to ensuring you are paying everything that's due, there are many write-offs you may not be aware of that could lower your overall tax bill. So remember, it's very important. And one thing I want to say, and a lot of people, when we give this kind of advice and tell them, hey, please hire an expert, they say, well, they cost money. Well, remember, CPAs, EAs, tax planners, or tax attorneys don't cost money. They save you money. They don't cost you money, they save you money. 7, you want to deduct assets to charity. One effective tax reduction strategy is donating and deducting assets to charity. Consistently donating benefits the charity and can benefit your business by showing your loyalty to the community and your brand's values. It's all about what people call CSR, corporate social responsibility. So you want to pick a charity that resonates with your brand and community and share more information about it with your customers. And so this is really great. It's always a win-win, which results in more loyal customers for your business. 8, you want to track every receipt with software. See, the whole thing is that when we talk about minimizing your small business taxes, it's important to keep in mind that record keeping is pivotal. Thorough record keeping and receipt tracking are how small business owners take advantage of every possible deduction. Disorganization could mean you are paying far more taxes than you need to. However, adequately tracking hundreds of slips of paper can be tedious, messy, and overwhelming. So you want to invest in software that helps keep everything tracked, stored, and organized. So we have covered this on other shows where I'm thinking about QuickBooks. I'm thinking about Xero. I'm thinking about Wave. I'm thinking about Expensify. There is a whole constellation of accounting software tools that actually are very suitable for small businesses. Okay, so this is important. So catching every single deductible expense is the key to saving money. So you want to invest today in a piece of software that takes the burden of record keeping off of your shoulders. 8, you want to fully utilize your retirement plan contributions. So the whole thing here is that the law actually makes it a lot easier for small business owners like you to reduce their taxes by actually allocating more funds to their retirement plan contributions. Okay, and the whole thing here is that if you want to save on taxes, you want to max out your retirement contributions. Okay, while this depends on how much your employees contribute, putting away as much as $58,000 in your 401k retirement plan is a smart move by the end of the year. seeking professional advice is always recommended. Here, this video should be the first start in your strategy to not only reduce your taxes, but also optimize your retirement. So please, you want to actually talk to someone who really understand your situation and can help you based on the kind of account, the kind of retirement plan scheme you want to set up. Okay, and the cool thing is that using the right retirement plan would allow for the largest pre-tax contributions. Okay, and larger contributions mean larger tax deductions, resulting in a lower overall tax bill. Okay, and so this is really good. And so talk to someone. Again, we want to go back to what we said about an EA, a tax attorney, or a CPA. Talk to them about helping you set up and contribute to a retirement account. Ten, you want to utilize startup deductions. By the way, I want to quickly remind everybody of today's topic. We're having a conversation about 20 tax saving strategies for a small business. 10, you want to utilize startup deductions. And the thing is that if you just officially opened your small business last year, you can utilize a few deductions available only to aid new businesses as they navigate expensive startup costs. We're talking here about initial cost, okay? You can deduct up to $5,000 in startup cost and $5,000 in organization cost if your total startup costs were under $50K. If you spend between $50K and $55K, you could use a partial deduction reduced by the overage. 11, you want to structure your small business as an LLC. Choosing the structure of your small business as an LLC can provide you with tax advantages such as the pass-through taxation. In other words, the business is not paying taxes. Everything is been channeled from your business onto your personal tax returns, and you pay taxes on your personal return. For example, an LLC, you file Form 1065. If you are an LLC and you have elected to be taxed as a partnership, you filed Form 1065 with the IRS along with the appropriate Schedule K1. And then what will happen here is that the income that you actually have made at the business level will be transferred onto your 1040 Schedule C, and that's where, from Schedule C it goes to your adjusted gross income on the same 1040, and that's how you pay taxes. So you avoid double taxation and save on Social Security and Medicare taxes. 12, you want to deduct your vehicle. Small business can write off the total cost of a vehicle weighing under 6,000 pounds, for example, a sedan or light truck. If that's true for your transportation, you can write off up to $18,000. You can also have the use of the vehicle for business purposes. However, if you use the truck or van half for business purposes and half for personal use, you can only deduct 50% of the expense. And so please make sure that you are able to see all those things. Those are really, really important because again, a vehicle can be a substantial expense depending on the industry you're in. 13, you want to implement HSAs for employees. And one very innovative and effective way for a small business to lessen its tax burden is to put aside money for future healthcare needs. And when we talk about HSAs, we're having a conversation about health savings account. As medical care gets more expensive, saving money for future medical needs is the wisest decision to make. Even if you're healthy today, you never know, boss. You never know. 5 years from now, are you going to have the same energy level? 10 years from now, 20 years from now, always think about the future. The best way to actually think about the future and also save on your taxes is to create something called a health savings plan for employees. So by implementing HSAs, a business can reduce taxes and future health costs. Contributions are tax-free. That's wonderful. Growth is tax-free. And when the time comes for you to withdraw for medical expenses, those withdrawals are also tax-free. Think about that. 14, you want to utilize fringe benefits plans for employees. Okay, this is really cool. So kind of similar to the HSAs, but basically you are trying to actually help minimize the strain of business the strain of business expenses on your employees, but also on the business budget. Okay, you want to utilize fringe benefits for your employees. When you increase employees' wages, you also trigger higher employment tax costs. One way to get around that is to offer fringe benefits as part of an employee's compensation. Some tax-exempt fringe benefits you may want to include are medical insurance, group life insurance, assistance with childcare, transportation reimbursement, employee meals, or even tuition reimbursement. 15, you want to add a cash balance plan to the mix. So while a 401k plan will be an essential retirement planning tool for many small business owners, the cash balance plan may make sense for higher income business owners. So I'm speaking to you architects, CPAs, lawyers. I'm speaking to you, the creatives who are really making a lot of cash right now. So there are a lot of things you can do. There are a lot of possibilities here. So it's all about, so if you are 50 or older and earning $500,000 or more, you should seriously talk to your fiduciary tax planning or CPA, your tax planning expert. Okay, this is really important about setting up something called a cash balance pension plan. This will help you a lot. Pensions are not complicated to set up and run, and not all financial advisors are willing or able to set them up. Okay, so please talk to the right expert. 16, you want to use accountable plans. So if you have employees, you are likely reimbursing them for some expenses. This may include things like entertainment or even travel. So using an accountable plan allows you to reimburse employees for business expenses without reporting them as employee income. Again, because you don't have the income, you don't have the associated payroll taxes. So you are actually reducing your overall taxes. More employee income means more payroll taxes you need to pay. Think about that. 17, you want to defer taxable income to future years. If you have a record year, you may want to try and defer a bit of your income into future years. This strategy will not completely eliminate taxes, but it can help save some money here and there. On the flip side, assuming you have a big taxable income year, you may want to prepay some expenses before the year's end. Hiring your family member to work in your business can have tax benefits. I spoke about that when we started the conversation. 18, do not ignore carryover deductions. Okay, and so some years you may not be able to use certain tax deductions or credits. This is why it's very important to make sure that you keep track of all the business tax credits or deductions that your business could actually qualify for. Okay, this could be as easy as just setting up a Word document or an Excel spreadsheet. So you see, based on the niche you're in, based on the structure of your business, based on your geography, some whatever tax credits and deductions you could qualify for, and not only federally but also state-wise. And if you cannot use, let's say, some tax deductions in this year, for example, you can carry them forward. Okay, some examples of tax deductions that you may be able to carry forward are the home office deduction, net operating losses with some limitations, of course, business credits, and even capital losses. This is why I was just talking to you earlier when I said you always want to keep track of your business losses, because you never know, you can carry them forward. Okay, and one thing you need to do is that you don't have to, if you don't like the whole idea of an Excel spreadsheet or Word documents, just get software. I spoke earlier about Expensify, QuickBooks. I spoke about Wave, Xero. Those are pretty affordable software tools for your accounting. '19, you want to stay up to date with tax laws. In other words, you want to be very, you want to keep abreast of tax laws. Stay current on small business tax law changes. If you are working with a financial planner who specializes in tax planning, and a CPA or other tax professional, an EA, a tax attorney, they can help keep you on top of relevant tax law changes that could affect your business. This is why it's important, and I've said this before, to have an expert on your side, because you have a business to run. You're not a tax specialist. You have a business to run, and you want to zero in on that part of the business. In other words, you want to draw sales. You want to drive revenue. That's what you should care about. So you want to outsource the rest of the operational needs to somebody else. For example, for taxes, reach out to an expert. Okay, you don't have to become a tax expert, but if you hear some headlines about new tax laws or major tax legislation, try and see how this may affect your taxes. So it's always important to consult a tax planner, okay? And see, the whole thing is that tax planning is not something you do once a year when filing your taxes. It is too late to take advantage of most tax planning strategies when tax season rolls around. Tax planning is part of being a business owner. Even if you are someone who enjoys staying up on current tax laws and loves bookkeeping, you will still benefit from working with a tax planning expert. So knowing tax law at a high level and filing your business taxes are very different things. The cost of a mistake can be astronomically high in both extra taxes and penalties. 20. Last but not the least, you want to know important small business tax forms. Let's just quickly go through them here. So we're having a conversation about, you have Form 940. So Form 940 reports annual Federal Unemployment Tax Act, the FUTA tax. Then you have, so that's due, this form is due February 1st. You have a Form 941 Schedule B. Okay, Form 941, also known as Schedule B, reports how much federal income tax and payroll taxes you have withheld from employee paychecks. And you actually must file this form on a quarterly basis. First quarter, April 30th. Those are the due dates here. First quarter, April 30th. Second quarter, July 30th, October 30th, and January 30th. Then you have a Form 1099. You have Form W-2. Okay. You have a 4W-4. So the W-4 basically reports how much tax you, the employer, should withhold from your employee's paychecks. You have a Form 1040 Schedule C if you're a sole proprietorship. You have Form 1065, 1120. You have a Schedule SC, basically, which calculates the Social Security and Medicare tax that self-employed individuals need to pay. So if you are self-employed, you need to file a Schedule SC. And the due date is April 15th. And then you have Form 8829. So this is known as expenses for business use of your home. And this is used to deduct eligible living costs like rent and utilities as business expenses. And this is due actually April 15th. And then you also have Form SS4, which actually helps you apply for an employer identification number. Thank you so much for your attention. I really appreciate it. Today's conversation, I just listed for you the 20 tax saving strategies for small businesses. Thank you. I'll see you next time. But until then, remember, stay marvelous.